Jeff, I really appreciate you taking some time out here, given everything that's going on in the
Yep.
markets. Let's talk. What is your first big picture thought on this tariff news and what it means for markets?
Well, I mean, I'm a 4-year cycle guy. Post-election year patterns, as we've talked about before, a post I put out yesterday really highlights what's going on here. I mean, this is very typical of the post-election year performance being not so great for new Republican administrations, like we talked about in the Almanac, but it's been tracking that sort of negative, more bearish or less bullish trend of, years after an incumbent's ousted, Republican administrations back in the old, days before 85, where they come in and, kick ass, take names, shake things up real quickly, so that they can start priming the pump as they get, into the third year to keep their party in power. So this is very typical. Q1 in the 4-year cycle of post-election year, Q1 is the weak spot. We've highlighted that. The other big thought is, this down Q1. We looked at that, also put it out there, on social media. If the market has already hit a bear market level or has already been in bear market status, you get that down Q1, it's usually a turn like we had in 09 and and other periods. But if it's not bear market territory already, and we're kind of near a high, which we have been recently, usually signals more trouble ahead. And looking at some of my charts, it shows that it's going to be some rough sledding into Q3 unless we can turn around here in August. And yesterday's tariff announcement, today's market reaction, the VIX being up, gold being down as well. I mean, it's kind of it's a proving point right now. Market's gotta see where it closes today. That's one thing I'm really looking at. If we can bounce off that low. I mean, technically, there was the potential for a W123 swing bottom.
Yep.
Had we come off that March low. Below that is the September lows. We are threatening some of those support levels, right now, and today's an important trading day.
Gotcha. When it comes to sectors, rotation, if somebody's looking, to buy something or to sell something, I mean, what do you think in this environment is good on one side and maybe something you want to avoid on the other?
Cash is good. Don't go selling into, cash is good. Warren Buffett, you don't, wait for a fat pitch. You don't have to swing. You don't have to trade. If you're, if you're in something, today is not the day to be selling anything into this craziness. Patience.
Yep.
If you didn't get out, we've been stopped out of a bunch of things already in our stock portfolio, ETF portfolio. I sold my IBIT, Bitcoin position. If it gets lower, I've got a bit in there to pick it up again for a potential, spring, April, May rally. But patience, cash, honor your stops. Just, you don't have to trade this. You don't have to buy something. There's nothing really right now that's other than bonds that is doing well today.
Yeah, I hear you. And that's interesting. Gold, even they even kind of came for that for a little bit this morning. What just briefly you touched on earlier, but just before we wrap up, what are the one or two or even three sort of technical or seasonal things you're looking at that would signal, hey, this is a time to start deploying some of that cash again?
Going to be rough coming into the worst months of the year with the post-election year stuff. We probably have to see some more capitulation, some more down draft. We have to, get back down to some lower lows. I'm not looking for some reasons to deploy cash right now. I'm looking for some reasons to not go more cash. So I think we're going to either the Trump administration. I mean, this is not a systemic situation. This is self-inflicted. Either Trump and the tariff team have got to make some deals or pull back or do something, because the world is and the markets are not liking it. So the economy is still strong. The Fed's in no big rush, but things have changed. I mean, you don't see the Dow down 1,500 points in the morning, even though it's not the same 1,500 points that we know from 10, 20 years ago.
Yeah,
it's still a sizable move. The VIX is up almost at 30, which is rough. I definitely need to see some more capitulation, some more bearishness, some more fear on Main Street I'm starting to see a couple of people, off of the financial arena, off of Wall Street, asking about things, making some comments, getting a little bit annoyed. So it hasn't really hit Main Street yet. So that would be one of the things I'd be looking for.
Got it. And just one last question would be, you've obviously been following the market for decades. Your father did for decades before you. What's a final piece of advice for anybody who may be newer to this trading game and is watching this kind of stuff happen on their screen right now?
Check your emotions at the door. Walk away. I went to the gym this morning. Trump dropped the tariff bomb. I went and lifted some weights. Kiss the kids, hug the wife, take a breath. Do not trade emotionally. Honor your stops, and this will come back. Whatever happens, here over the next days, weeks, months, like we saw after COVID when everyone thought the world was ending, it will come back. And learn from this. Write down, make notes, realize what your emotions were and what happened at the time, and to be more prepared for these types of things in the future.
Got it. Hey, great. Appreciate you taking some time out, Jeff. Best of luck to you, and thanks again.
Appreciate you. Thanks, Mike.